Hello and welcome to the Business and Banking Dialogue Show. Good evening to everyone. Thank you for joining today's uh, dialogue. Uh, Today we have today is a special day, as the very last show for the current year. What we started sometime in the month of April, May, has we reached up to December, a phenomenal run, and we crossed over 125 sessions. Uh, it was earlier daily, then we made it bi-weekly, that is every Wednesday and Friday. So today is it's a day to celebrate. It's an occasion that at the end of the year we are still there, and going strong towards the next year. So all hopes are on the next year. This year has not been not so good for every one of us in every way. Okay, but that's the unfortunate thing. So let's forget about it and let's move to the next year and see what are the hopes and aspirations that hold for us in the next year. So, ladies and gentlemen, welcome again to the show. And you are live on YouTube, Facebook, LinkedIn, and Twitter. My name is KK. I'm the moderator for today's show. So, today we are looking at a very important aspect of the financial world, that is the audit. Okay, audit has changed tremendously. COVID has changed our lives in many ways, as you all know. As intimidating as it may seem, audit is moving to a fully automated process, seamless and perhaps cost effective over time. And that's what the effect of COVID is. So, ladies and gentlemen, welcome to the world of virtual audit, or e-audit as it is called, or some people call it the remote audit. However, audit and technology combined looks to be the way ahead. Okay, we will learn from our specialist, the subject matter experts out here. The future of accounting is taking advantage of technology disruption to ensure that to eliminate auditors' personal site visits to offices, factories, storehouses, which we are also used to, right? Auditors coming to our offices, that seems to be uh, going off the table. Auditors will henceforth audit remotely and go virtual, taking advantage of technologies. So last time also, we did talk to Khushroo about remote audit, but we did bring in the aspect of technology, and today we are doing that. So to discuss how audit will shape up in the future, please welcome two gentlemen from Grant Thornton Advisory, Mr. Khushroo Panthaky and Mr. Akshay Garkel. Um, Khushroo has been here. Khushroo is a CA with over 35 years of experience and currently a non-executive director at the Grant Thornton Advisory, while Akshay is a business leader with 20 years of work experience in information security and cybersecurity spanning across various geographies, including India, APAC, and the Middle East. His areas of expertise range across the relevant blend of cybersecurity, business, and practice management. So, ladies and gentlemen, please welcome these two gentlemen. And I know we would like to hear from them how uh, technology and audit, or audit and technology, how are they going to combine with each other in the days to come? Ever since COVID has transformed many things, and audit seems to be one of them. So let me ask Khushroo. Khushroo, please share your experience about the virtual audit so far, and what is your view regarding the forthcoming audit season? Do you believe that the virtual mode will still continue to prevail? And how better could be one prepared for the same? We are assuming that things will get better. So, but still, the virtual audit, would it continue?
Uh, Thank you, KK. Thank you for this opportunity. First of all, my hearty congratulations to you and your entire team. 125 plus episodes on a daily and on a weekly basis is definitely nothing less than what one could expect. And I think I must say that a lot of hard work from your organization and others have gone in, and truly privileged to be a part of this particular concluding session. So thank you on behalf of Akshay and me for this great opportunity. This is my third time coming on this particular business banking dialogue EPS.
Yes.
And especially coming now to the concluding one when we talk about audit, and we are ushering into a new audit season currently.
Yes.
So I must say, from an overall perspective, that my sense about this entire thing is very, very clear. We are right now ushering into the month of January, and we are not very, very far away. Typically, if you ask me very honestly, we are not very far away as far as the concluding audit season is concerned. We are going into be in another busy season, given the
Yes.
fact that this particular busy season will start any moment, because when you are going to be finalizing the listed company audits, the listed companies are not, I mean, you're not going to be working significantly in April, May, June. You're going to be working in the months of January, February, March. And you are going to be doing a lot of work on the interim audit. When I say interim audit, it means that although the auditors of listed companies have completed the 3 quarters in terms of the limited review, the real audit procedures actually starting from the 1st of April 2020 and until maybe 31st of December or 31st of January 2021 get done in detail. The detailed audit gets done somewhere between January, February, and March. And that is what we call as an interim phase of audit, which includes my entire assessment of internal control environment, which includes my planning, which includes my substantive procedures, and a lot of other things which can get done, except for maybe the finalization procedures, which definitely happens between the months of April and May. But having said this, I must say very clearly, and I'm extremely convinced about it, and I'm sure very few people will disagree with me, that this is another season of a virtual audit. You may recall, KK, that even 3-4 months back when I came on your show and we were talking about the future of audit and we were talking about another season, I was even very clear at that point of time that I am not seeing another audit season with a physical mode of audit. It is going to be a virtual mode. And I'm happy that my predictions have gone correct. However, there will be a slight tweak in terms of what will happen in the future as far as this audit season is concerned. You may recall that 31st March 2020 year-end audit was almost 100% virtual audit. It was a shakening experience, given that, it came up at a point of time when nobody was ready. But I must say that, it's gone well. Government was kind enough to extend the timelines in terms of filing the audit reports, etc. But this 31st March 2021 will be a combination of the virtual mode and a physical audit. To a great extent, I can say with some conviction that it could be 75% virtual and maybe 25% physical. I can be wrong depending upon state to state where the audits are being carried out, depending upon nature and circumstances, the preparedness of the client, the timelines, etc. But I see this happening virtually to a great extent. Physical procedures, physical presences, physical visits, etc., will be there to some extent. However, extremely important point over here to consider would be, and I keep emphasizing on this in every particular audit lecture that I give, that an auditor needs to be well planned in terms of what procedures he would be carrying out and what work he will be carrying out during the course of the audit. And if the planning is being done effectively, if the management buy-in is there in terms of how the management will support and cooperate the auditor in meeting the timelines, in doing an effective audit, then I think everything is possible. I mean, I have shared my experiences with you in the earlier show that how well an audit can be planned if the management and the auditor agree on specific timelines and on the things to be sort of made available to the auditor. So I see the season to a great extent to be, answering in a nutshell, another significant virtual season with great planning to be done by the auditor, a great support and planning to be done by the management, and definitely involvement of those charged with governance who have an oversight on the management to make sure that everything happens and to its best of its abilities. So that's my response to your question.
Super. So let me turn to Akshay. Akshay, your thoughts on the ongoing, the thought that the virtual audit is what Khushroo has been saying, a certain percentage of which may still be physical, but how does technology help in this virtual audit?
Sure. Thank you so much. First of all, I wish the audience a very happy New Year in advance, and thank you to you, and of course, Khushroo as well for pulling me in this show, and it's a pleasure, and to my pleasant surprise, 125 episodes by no means is a small task. So congratulations to you and KK, to you and your team as well.
Thank you.
On the technology front, so let me just start by saying that, of course, we've all been experiencing this new normal. As people have been saying, geography is history, and it has been, there is no location per se, and while we talk about that, thanks to the regulators and the government for essentially giving a lot of leeway and relaxing a lot of norms in terms of organizations look at audit, and in terms of the filing of their reports on time, deadlines have been extended, etc. In terms of what we've been experiencing, and I'll break this question into three parts. What we've been experiencing during what generally organizations have been seeing during the COVID times is that a physical and environmental visit was really not possible. And keeping that in mind, how organizations have looked at audits with respect to doing those video walkthroughs, thanks to the collaboration tools where audits have been carried out. At the same time, making sure that the assurance levels of essentially reporting the current state of the physical and environmental controls, both the design and the operational effectiveness, essentially has to be in order. So, of course, there have been certain designs and redesigns to be checked. At the same time, also looking at the integrity of the artifacts, right? And how do you report those artifacts? At the same time, how do you basically maintain and manage your working papers? What are the things that you do differently in the working papers? And making sure that all the false positives that you could potentially encounter essentially are filtered out. That's the first piece. The second piece is when you look at any kind of a technology environment, and of course, today's time we know that even if you broaden the horizon and talk about the BFSI sector and not focus only on the payments bank, there is a heavy concentration and reliance on technology. Now, there has been all sets of, and if you typically take an organization which has been a legacy organization for a couple of years together in the market today, they have both the legacy infrastructure, and then they of course have the state-of-the-art infrastructure, which is cutting edge as on today. Now the art is to basically integrate this environment, and when somebody goes and conducts an audit, how do you basically make actionable intelligence of whatever you're able to get out of the audit? That means looking at the legacy infrastructure, looking at the the transactions and the details from the legacy infrastructure, looking at the transactions and details from the state-of-the-art infrastructure, and then stitching the two dots together. Now, stitching the two dots together again require both an automated and a manual intervention. I'll just leave it at that, but just food for thought is that how does the two worlds integrate very seamlessly with each other? How do you basically bring the automation in place, and then on top of that, how do you bring in the eye to detail from an auditor standpoint to make sure how you're picking up the needle from the haystack? So I'll leave it at that, and of course, I'll be happy to share more experience as we go along during this conversation.
Yeah, thank you, Akshay. You did talk about BFSI. So when you talk about BFSI, so I thought let's pick up the payments bank automation. Okay, so given the overall landscape of payments bank environment is highly integrated, how does audit automation come in play?
Sure. So when you look at the audit automation, first of all, when you basically look at conducting the audit, it's important to understand the entire data flow. And when you say there is a high concentration of technology, I would say there's also a high concentration of integration of the technology with each other. There are various perspectives of data. If you slice and dice at across levels, you will find various information coming in. Say, for example, right from customer information to basically the transactions which have been done, right from customer onboarding to the transactions which have been done, various legacies to the state-of-the-art, essentially. And of course, I'll touch upon one word, which is the cloud, because today there's a high adoption of cloud as well. So from that perspective, a lot of payments bank are relying on cloud service providers. Of course, while I say they are relying, there is, a compliance to the RBI norms as well, which talks about data localization, which talks about in-country storage, which also talks about, and of course, it also talks about the cyber security compliances, which is very important as per RBI compliance. So if you refer to the master direction circular issued by RBI. Now, focusing back to your question, KK, when there is automation, of course, there are so many transactions. It is not possible to look at the transaction in a manual fashion. It is important to basically bring in the automation. It is important to bring in the aspects of the right amount of use cases which you want to apply to the transactions, and what is it that you're trying to pick up out of those use cases. How are you going to confirm that you have looked at the transactions from a complete holistic standpoint? And for that, looking at one or two applications in isolation is not going to help. So first is to basically build the entire data flow, understand which are the assets which basically come under the data flow purview, and then basically apply those use cases across those assets. Of course, it is also important to look at certain areas where, for example, let me give you one simple example. Somebody has raised an invoice, and against the invoice somebody has raised a credit note, and then again there is another invoice which has been raised. So is my tool really throwing a output which says that there is a double invoicing problem, or has my tool actually gone ahead and basically picked up the credit note issue as well? Now, while there is no problem there, but that is where, coming back to my point of the audit skill, which is also very important, you cannot have 100% reliance on the tool. And that's when the audit skill comes into picture. And that's where, and I'm sure Khushroo would also agree to it, that, a very seamless activity in terms of looking at the business process and the technology process has to move hand in glove while conducting the audits as a best practice. Back to you, KK.
Okay, thank you so much. So I think Akshay did cover the thought of how technology helps audit, basically, okay, and how a combo of technology and the audit standards that are there does help the client in getting through the accounts and compliances. So I mean, you have done so many audits. So can you kindly share some tips for the corporates and the audit fraternity as to how seamless the audits can be carried out for the forthcoming busy season, as we may say? What more needs to be done at both ends?
Absolutely. I think Akshay touched a very, very important point, that it's a combo. It's a combination of a business process audit and a technology process audit as well. And that is basically, the entire concept of an effective and an efficient audit. And when I say effective, means that the audit should be in a position to come out with some specific issues, which could be control weaknesses, which could be material deficiencies, which could be a lot of things such as errors and omissions. And that is possible only when you deploy technology to the best extent possible. I would call today's audit as a coin which has got two sides. The traditional audit procedures, which you never forget because these are your auditing standards. But at the same time, how would you carry out those audits? How would you apply those audit standards by devising audit procedures with the significant involvement of technology is something which the organizations have started to work. And without the support of information technology, we will never be able to do an effective and an efficient audit, which means that efficiency will be brought in. Ultimately, every audit also has to be profitable for the individual or for the organization. And if you're going to be spending hours and hours and hours doing a traditional audit without the involvement of technology or a specialist IT auditor, you may not be in a position to be effective. Now, your question related to what would be some of the tips which I can give it to the fraternity in terms of the forthcoming busy season? First of all, I'll be very honestly saying, and I touched upon it earlier, that you need to do an effective planning, which means that you discuss with individuals, you discuss with the management about the specific timelines, etc. There are certain things, for example, as an auditor, you are required to report on many other important aspects, which forms part of your audit report, what we call as CARO, or annexure to the, which is known as Company's Auditor's Report Order. You do not have to sit down in the month of April and May and start working on that or discussing with the management. This is the time when you actually go into the issues of CARO. You plan out those procedures. You discuss with the management as to how those procedures can be worked by the auditor with their support, with their cooperation, and the information that is being given. I think you can work on that. Complex accounting issues, I believe, because audits are becoming very, very complex on account of the fact that the business organizations are becoming complex. Look at it today. I mean, there are so many things which are being discussed in terms of, complex accounting, derivatives, etc. Ind AS being applicable to listed companies. Many companies report internationally under IFRS, etc. So these complex accounting issues need to be dealt with in advance. Early warning to be given to the management in terms of the experiences that the auditor had in the previous audit season, where there were hiccups and things could not be done on time for whatever reason, for the inefficiency of the management or for the inefficiency at the auditor's end. And those things need to be addressed well in advance. I also believe, as a heads up, I would like to tell my fraternity also that confirmation of balances is something that they can start working on now. You do not have to wait till the month of March and April to roll out the confirmations on debtors and creditors. Very, very important point I would like to make over here. I think the belief is that we will only circulate debtor balances for confirmation because undoubtedly revenue recognition is an important phase of an audit, and the biggest risk on the audit is a revenue risk or revenue recognition, of course. However, people forget that there is another thing on creditors also, and therefore creditors confirmation also need to be circularized. You can start circularizing those balances in for January and numbers or February and numbers and get those results by the month of March. And then on those balances which are independently confirmed to the auditors by the debtors and the creditors, you can carry out the roll forward working audit procedures to make sure that they corroborate with the numbers or there are reconciliations available of the balances in the books and the balances confirmed. So these things definitely can be done well in advance. Regular communication, I believe, is also important within the audit team, because if you're going to be talking to your audit team once in 10 days or once in 15 days, depending upon, whenever you have the time, etc., it's not going to work. On large audits, the audit partner, the audit director, or the engagement manager should be having internal discussions with the team at least on a alternate day basis whenever the work has started, so that that important meetings of 1 hour or 2 hours with the team members can really bring out so many issues which the team has been encountering, and the involvement of the partner or the manager on such important issues to be escalated to the management and those charged with governance can bring in a lot of efficiency into the audit. Some other things I can say from our own personal experiences, logistical issues which people may have encountered during April, May, and June of this particular year when they finalize the audit for 31st March 20, could be in relation to bandwidth issues at home or data capacity not there in the servers, etc. Technology enablement to support the audit function, etc., which may not be there. I think those issues can be sorted out now rather than running helter-skelter in the month of February and March and getting those things sorted out. And finally, very, very important is that as leaders in the engagement team, as a partner, as a director, how well the documentary evidence of the reviews done can be established through Zoom or through any other technology which is being sort of an accepted technology like Teams, etc. And how would you document? Because ultimately, when the regulator is going to pick up the file, the important question is that how effective the audit has been done. And if it can be very clearly demonstrated by the review done by the partner and the another engagement leader, who could be a manager or a director, being properly documented, then I think it can speak for itself in terms of the quality being embedded in the audit. So these are some of the things I believe can sort of, be a heads up to our fraternity now rather than later. Over to you.
Thank you. Thank you. So, ladies and gentlemen, I think what Khushroo is, and those who are involved in finance, I think he says do the preparation now, right? So that you don't run helter skelter as the March end comes through. So there are many things he did speak about. Typically, those confirmations from from debtors and creditors. I think those are something that that can be done right now. Um, so Akshay, let's look at a technology which is enabling audit. Okay, uh, that is the use of business intelligence. Okay, so intelligence, like day-to-day operation, there is such a lot of data available in every company, and if it is a public sector bank, I mean, there's humongous amount of transactions lying in the core banking itself. And so right from the customer onboarding to execution of services, it's all there. Okay, that's a lot of data. Okay, and if it's a bank which is having doing about 20 to 30 million transactions a day, it's like a massive amount of data lying there. So with this kind of data, how is the payment, how is the payment monitoring performance, and is the use of behavior-based tools encouraged? I mean, is that encouraged as okay from an audit point of view, and does it help the entire audit process?
Right. So what we have seen in again, what we have seen in terms of the organizations that have essentially been adopting, especially in the banking space, are uh, tools which help in continuous compliance monitoring. And when we say compliance, the compliance is not limited to only the regulatory compliance, but also predominantly from a fraud and risk monitoring standpoint. Now, these tools necessarily are behavior-based tools, anomaly-based tools, and also signature-based tools. Now, I'll try to explain, the difference between the three. So, predominantly, when you say signature-based tools, these tools are where the use cases are already fed in, and based on the use cases which are fed in, certain alerts and responses come up as hits. And as these tools essentially get into the organization, they mature over a period of time. And then, once the hits comes in, the organization goes ahead and does a false positive tuning. That means, in case if it's a false positive that has come up at point or day one or day two, essentially that will further get fine tuned. Those signatures will further get fine tuned, and based on which the hits will start coming through in a more I would say in a more valid fashion. Because at the end of the day, what also has to be appreciated is that fine tuning the false positives in the volume of information in terms of the transactions that you mentioned is also it's not a small task. It's a Herculean task. So as the tool starts coming in, it has to basically mature over a period of time and start learning your organization. Once that learning happens, then you have a tendency of putting such tools into a learning mode, where you use certain patterns to pick up, certain trends to pick up anomalies, and then basically throw them as alerts, either in the form of reports or any alerts which come through the alert mechanism or the alert monitoring system. Now, that essentially happens once you have been able to profile your customers, your accounts. You've been able to profile certain locations and branches depending on which location it is in, and then essentially start monitoring the transactions based on the pattern of the nature of, and also certain history in terms of the fraudulent histories in terms of the volume of transactions, especially in the limit at which the transactions are done. Also certain remittance in terms of foreign remittance and things like that, which are also closely monitored depending on how you build the use cases. And there is a framework which is very clearly defined by RBI, so that framework has to be mandatorily followed. Apart from that, of course, there are leading practices on which these tools can be configured. So that's on the heuristic pattern that I would say. Now, when you talk about the artificial intelligence, there is a strong belief in the fraternity that all the artificial intelligence tools start with the business intelligence aspects first, and then they mature over artificial intelligence. Again, from an artificial intelligence standpoint, there are modules, there are bots and routines which are written to basically pick up such kind of anomalies. And there are a lot of sophisticated tools which are available in the market. There has been a high rate of adoption, but the high rate of adoption is only up to the alerting mode rather than blocking the transactions. Now, of course, as you move forward, there are certain parameters under the purview of RBI where you can actually block the transactions, and I'll lean on Khushroo to basically just guide us there in terms of what the framework really talks about. But at the technology level, I can say that it is pretty much possible uh, to basically bring that, but the best practice is not to start all of that on day one. Idea is to mature it over a period of time, build your use cases from a signature standpoint where you actually define the use cases. And as Khushroo rightly pointed out, to spend this kind of time, it has to be the organization like a bank and the auditor working hand in glove to make sure that when such things are being picked up, what are the use cases that are being applied. Of course, it's to the auditor's discretion totally, but of course, it is important to work closely with the audit function, which is the bankers here, or the compliance team within the bank, and then basically take it from there.
Okay. So, Khushroo, a word from you on the on what Akshay said about blocking transactions.
I think Khushroo, you're on mute.
Yeah, you're on mute, Khushroo.
Sorry, of course. My apologies. Sorry. So I think Akshay made a very, very valid point that yes, it cannot be all starting on day one itself. It can be sort of, planned over a period of time. But at the same time, what is important is that how well you can see managing these days, the data is significant. How well you manage that particular data. Because you can be given, crores and crores and crores of deals and transactions, etc., which how well you are in a position to process that particular data to give you the result that is being expected. And the way I see an IT auditor functioning in these large organizations as a support to the audit team is a very, very clear understanding between the core audit team and the IT audit support team, whereby they both are aligned in the planning, in the execution, and enabling an effective reporting, whereby the data generated, conclusions reached, and the judgment specifically applied of the audit partner in terms of how much further needs to be done and how well other things have been done, and then what can be done right now to conclude and what can be done in the subsequent cycles, because you cannot do everything in one go. But yes, when you are reporting at the year end and you are reporting on the entire audit, I think that's the time when the IT audit partner and the audit partner, who is basically the partner on the job, need to work together to make sure that nothing significantly has been missed, so that it could result into a misstatement of the numbers in the financial statements. So my view is again exactly aligned with Akshay, that the data is confidential, the data is significant, it is large. How well it can be sort of worked with the best sorting possible to get that particular comfort as a support to the audit team.
Yeah, so the Khushroo, we've been used to audits based on samples, right? So you take about various samples are taken and then that's audited and pushed through. But these are the days of big data, right? Massive amount of data is lying around there. So with this change that is happening, is there that the sampling way of doing audit is going away, or that continues to stay?
Yeah, it's a very good question. I think I remember having touched upon it in my earlier session as well. It's a very, 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 very good point. Well, I can tell you a couple of things. I come with my experience of many, many, many years. I'm not a traditional auditor. I have evolved over a period of time. But a couple of things I can say, that audit standards will continue to remain. Technology will keep evolving. Tools will keep evolving. Approach will be definitely, I think, more now aligned towards reviewing or auditing the entire population.
Okay. Yeah.
Now, this could be possible with due respect, maybe when large audit firms or audit firms which has got the best of technology available to carry out these audits. And that's the reason actually I keep requesting all our people in the fraternity that definitely when you get audits of large sizes, large organizations, please make sure that the audit team, the infrastructure, the technology support is significant to have a proper commensurate relationship with the size of the company that you are auditing and the capabilities that the team has. So to answer your question very precisely, sampling will definitely be there. It is a tool which is a statistical tool which you have to, I mean, sampling has to be statistical, I would say. You just cannot, this is not the world to have a random sample, especially in companies with larger number of transactions or voluminous transactions. Sampling is definitely there. It has to be statistical sampling because a sample should be a true representative of the population. If it is a random, it is not a true representative of the population.
Yeah.
And to derive a true representative of the population, the statistical sampling techniques and the IT technology enablement has to be of the highest order so that you pick up a sample which can really represent the population very well. Now, given the fact that when you're auditing a large insurance company or a large bank, whether a sample of 40 or 50 or 100 or 200 or 300 or even 1000, even if at all you extract that kind of a sample, can it be a true representative of the population? Can it give you that particular comfort to conclude on certain assertions like existence, occurrence, valuation, etc.? The answer until now had been yes, but let me tell you, with due respect, the regulations and the regulators have changed substantially. The regulators are becoming very demanding, and the regulators are definitely asking those questions now in terms of the fact that what is it that you have done beyond the normal audit procedures? How can you give a comfort to the audit to those charged with governance in the case of a large bank with large balance sheets that you have done a sample of 1,000 and you did not find anything substantial, and therefore you believe that things are fine? And that is exactly where somebody like Akshay, with his technology and with the team that he has, will be in a position to carry out the audit of the entire population. Maybe it can be data analytics, it can be big data, it can be RPA, robotic process automation, it can be very many other tools of audit, depending upon the system that the company uses and the ability of the team to understand, to audit, and to come out with some of the errors that could be there. Because ultimately, you are not just doing your work to have a tick in the box. The idea and the objective of a good IT auditor is also to find out deficiencies in the systems, whether it is data integrity, whether it is application controls, whether it is input-output controls, whether it is accessibility. And having done that, security, etc., having done that, which are the loopholes or where are the gaps? And what can those gaps result into? Would it result into misstatements, which can really vitiate the true and fair view of the financial statements? Or they may not be very material and they could be exceptional.
Right.
And that is where I believe that the world is transitioning on the other side now. And the world of audit is going to change substantially over the next 3 or 4 years, what I call as the future of the audit, where there will be more of technology involved. And at the same time, the population, the entire population would be checked to report on specific exceptions and whether those exceptions lead to misstatement. But just one more final point I would like to make, and I'm always making that point in every lecture of audit that I give, that with due respect, and Akshay, with due respect to the entire technology which you love the most, no technology, no 100% technology can replace a human mind. Because even the technology can go wrong at any point of time. And I personally believe that a professional judgment of the audit partner and the audit team combined with the best of technology to support can only lead to an effective audit.
Absolutely. Absolutely. I don't think there is any doubt about that. At the most, a lot of data can be thrown across to you, and to kind of read through the data and make an information out of that. It's a human mind that applies and looks at where there could be deficiencies. I don't think so. That's great. Thank you. So, ladies and gentlemen, this I hope you are enjoying this discussion that I'm having with Khushroo and Akshay. It's so important for all of us who are in the corporate world to understand that things are changing, and things are going to dramatically change as we move now into the, shall we say, the post-COVID era. Okay, though we don't know when it is going to start, But let's hope that the new year brings that kind of hope. And so it's very important to understand. I'm sure you have a lot of questions. Do ask these questions in the Q&A box, and we'll be more than happy to take it across. In case you want to ask a question directly, you could do that. Already there is one gentleman who wants to ask a question. It is Mr. Tyagarajan from Chennai. So Tyag, can you please unmute yourself and ask a question?
Hi, very good afternoon to all of you. KK for spearheading this 125 plus, to be precise, 127 BBD show. And to the entire team of BBD, kudos to you and to your team. And I'm really enjoying what Khushroo and Akshay are saying today. Tremendous amount of very relevant inputs for the fraternity of chartered accountants. And I'm a non-chartered accountant. I'm very much enjoying the inputs given by Khushroo. And actually, thanks to you, gentlemen, for enlightening the community about things that you have gone through with tremendous experience and expertise. Having said this, I'm going to ask maybe a lousy question, maybe if you can pardon me, but very relevant if you can take it in the right perspective. The question is, today is the days of the virtual audit, right? So we're all seeing virtual audits going. The thinking has become a reality now. Now, having said this, Khushroo and Akshay, there is always a thing when you provide a audit report. There is something called auditor's note. There's something called an auditor's statement, right? So in this virtual scenario, what are all the points or the things that you would insert or say you will put in this auditor's note for the relevant stakeholders, including the regulators, to see that they are relevant? And the point is, since there is no one-to-one interaction, you definitely, I believe, there will be some clause or the things that you will insert in the auditor's note. So how relevant they will be, or how they will be looked at relevant by the respective regulators? Are they legally valid, or are they legally tenable, or can they be legally challenged? And for this CA fraternity, what are the points that are required to take care to be put in this note, so that the whole audit is looked at holistically by the regulators and the whole stakeholders in the ecosystem? Can you throw some light on this, Khushroo and Akshay?
Surely. Of course, I will start, and then Akshay can definitely sort of support in terms of his perspectives. But Tyag, I'm happy that you raised this very valid question, and I wanted to make this point earlier also in my submissions, that given the virtual mode of environment, which we have already been used to, last year in the 3 limited reviews that we have done after that, and now one more audit season for the year end coming up. Let me say at the outset, and it's important for everybody over here to understand, that the virtual mode of audit that we all are doing is definitely not to be done with any less rigor. I would say not even 1% less rigor. Because from a regulatory environment standpoint, and very rightly so, the regulators have not said that we will look at you with leniency if at all there is any dilution in the standards of audit or in the applicability in the standards of audit. The regulators are going to be reviewing the files, the management, which is responsible for the preparation of the financial statements, have to ensure that the financial statements are prepared in line with the accounting standards, in line with the compliances, and ensuring that every percent is true and fair, and rather to a great extent 100% right. Now, coming to your question that can you put something in the audit report? The answer is definitely no, because first of all, there is no leeway. There is no mention of any fact that this particular audit is being done in the virtual mode, and we have carried out certain procedures, and because of the fact that there is a COVID environment, other procedures could not be carried out. Because again, the standards say very clearly that whether it's a virtual mode or a non-virtual mode, if the auditor is not in a position to carry out the normal audit procedures, then the auditor is required to carry out alternate procedures. So in the absence of normal procedures, which other alternate procedures would be giving him the same comfort or a significant comfort to conclude on a particular assertion or to conclude on a particular matter? In the event that the auditor does not get any comfort or less comfort on some important and complex matters on account of the fact that he had to carry out alternate procedures, but not the normal procedures, then the auditor will have to sort of communicate the same matter to post-charge with governance and decide at that point of time, either by way of a qualification in the audit report or by way of any other manner, make a proper disclosure that given the fact that this was a virtual mode of working and the fact that the alternate procedures could not be performed for the following reasons, we are not in a position to conclude on the reasonableness of this particular amount forming part of the financial statements. If he believes that this significant amount is material to the overall financial statements, which can definitely vitiate the true and fair view. So that particular disclosure will come, but at the same time, he cannot make a statement that I have done the audit in the virtual mode and therefore I think some of the procedures could not be performed. The second important point over here, to answer your question very clearly, is that, right from the 31st March year-end audit, which we all went through as of 31st of March 2020, the management has made an adequate disclosure in terms of the impact on the business performance, impact on the financial reporting on account of COVID. And these things have continued in the notes to accounts, etc. You will see different. And again, I am definitely not a follow the fool kind of a individual, or I would never recommend follow the fool kind of a practice, whereby people can just start copying those notes to accounts and the auditors will start copying, etc. I have seen people just doing blind cut and paste at times. That is not correct. Every management and every auditor will have to independently evaluate and assess the impact of COVID on the business enterprise, the financial reporting, and on the going concern. And accordingly, the auditor will have to take a call in terms of making that specific disclosure in the audit report, which could be by way of a para of emphasis or in any other manner. Now, that is a kind of disclosure coming in the audit report under the current circumstances. You can see different practices prevailing. It can be prevailing till 30th September. Now, given the fact that, let's say, that many companies and many organizations felt that, impact of COVID is going to be significantly coming up in the year 2020-21. But if the business is as usual, if some of the companies have even declared better business than March 31st, 2020 year end, where is the point of mentioning that the COVID will impact your future business performance or COVID is going to impact your profitability? And therefore, the companies and the management should think through that whether that particular COVID on going concern, COVID on future performance needs to be continued in the notes to accounts. And even the auditor should decide at that point of time. Now, if the auditor believes that it is impacting, then the discussion can be there between the management and the auditor to retain the note and retain the disclosure. So each on a case-to-case basis. Other than that, I don't think that there are any disclosures required, given that there is a virtual environment. Akshay, over to you.
Thanks, Khushroo. I think you summarized it very well. The only thing that I would like to add here is that in an advent where a remote audit is essentially happening, there are instances where organizations do conduct physical walkthroughs or rather virtual physical walkthroughs, and they basically look at the environment through a virtual mode. But of course, that is something that one cannot completely ascertain, but it is mandatory for auditors to kind of add certain controls over and above when such virtual walkthroughs are happening, where I did brief upon it in the beginning of my conversation that you need to have a secure login into the environment, number one. Number two, the virtual tools that you're using has to be of a repute nature. Number three is that whenever there are any report extractions which are happening, you have to validate the authorization levels of the person who basically extracting those reports for you from the system, or whoever is doing virtual walkthroughs essentially are authorized to be stepping into the data center or the physical environment. Number four is to also look into making sure that you have the adequate amount of screenshots kept with you as an artifact and adequately mentioned in the working papers in terms of what has been seen. And post that, you essentially can then draw a conclusion, as Khushroo rightly pointed out, that still if you are not able to conclude because of certain deficiencies, then you basically make a declaration and depending on what is the material nature of the observation. But apart from that, these are some of the additional controls which have to be followed, and definitely while reporting to the regulators, because regulators time and again ask these questions pertinently in terms of where are the areas where you felt are the deficiencies, and that is the time where it has to be very transparently put across what has been observed and what was the nature of the reliance that you're not able to draw because of this situation. Another point that I would like to add is where Khushroo pointed out how's 2021 going to look like. 75% virtual and 25% on-site. I can tell you that physical and environmental has to be within that 25% is what I would like to add. Back to you, KK.
Thank you. Thanks, Tyag.
Sorry, KK, I just wanted to take a cue from what Akshay mentioned. I wanted to sort of highlight on one more thing, and again important for the audit fraternity, that many a times the firm, let's say hypothetically the audit is getting finalized in Mumbai, and there are certain stock takes to be done in Aurangabad and in Jamshedpur and in many other locations where the auditor may not be in a position to go and physically observe the inventory count done by the management. Over here, once again, I would like to inform that it is the prerogative of the audit firm to request other firms in those respective regions to go and audit other audit firms or other accounting firms to go and actually observe the inventory verification, and then submit that particular report of verification and discrepancies to the principal auditor back in Mumbai. The appointment of that particular firm has to be done by the audit firm and not by the management.
Yes.
And this is because it has to be ensured that the independence of that particular audit firm should not be impaired by involvement of any management. And therefore, one cannot have an excuse that I could not go to those locations to do a stock count, and therefore I would want to sort of qualify the inventory verification. There are ways and means of doing alternate procedures. So I have seen in the past, and given my experience of reading some of these balance sheets, I would once again request the fraternity that do not think that by giving those kind of disclosures, you would absolve your own liability. Your responsibility as an auditor is to get it done by another expert under your guidance, under your engagement terms, and making sure that his appointment is also being done by you after checking his professional qualification in terms of whether that person is competent enough to actually go and do that particular work. It's all your responsibility. And therefore, I think there are no leeways, to be very honest, in terms of these procedures.
Okay. Akshay, let's look at cloud. Okay, and that's something I think many of the people in the audience would love to hear. Today, like virtually every company, or at least all the new companies, are definitely going to the cloud. Okay, almost all. And some of the older companies with the legacy systems are also, thinking of how to move this entire thing to the cloud, maybe because of cost effectiveness, efficiency, use, etc. Now, so what are the RBI guidelines for the data localization for banks that may come into effect as, typically, if you can take a BFSI, you can take Payments Bank, for example, since you may have done some. So what are the controls that a company or a bank, payment bank, or any bank needs to do when they're moving to cloud?
Right, absolutely. So I'll answer again in two parts. The first part here is that cloud adoption, as we have seen, has drastically increased, and for obvious reasons. I think I may sound rhetoric if I give the reasons why cloud adoption is so popular. However, in the earlier times, in the beginning, organizations were apprehensive of actually porting some of the applications which contributed to financial reporting to the cloud, because right to audit as a clause was not acceptable. And again, I'm probably sounding vintage by passing that statement, but nevertheless, I'll still, because today most of the cloud service providers have accepted and are opened up their gates for third-party audits, and also internal audits by their organization, by the client organization. So so first was, of course, having the acceptability, and then of course porting the applications to the cloud. Now again, there are, as we are aware, that it's not only porting the application, but it's also utilizing either the infrastructure or the platform from the cloud service provider and then hosting your application. So of course, depending on what is the nature of adoption of the cloud, the security controls and the compliances would vary. Now, of course, if it's infrastructure, then you basically look at the infrastructure hygiene and how much of assurance can you draw from the infrastructure controls which have been applied, and what is the mechanism that you're able to apply to monitor those infrastructure or platform-based controls. Talking a little bit more about the platform is how do you basically bring in the hardening standards, essentially, which would be contribute as a part of your compliance policy, and that compliance policy would obviously, the audit assurance will be a part of your compliance policy, because you would also bring in the additional leading practices to kind of make sure that you're not complied only on paper, but also in spirit. And then, of course, the third piece is the important piece, which is the core application. So tomorrow, if you're basically using software as a service on the cloud, or you're potentially using, you have your own private instance on the cloud, then again, what are the parameters that you're monitoring? First of all, what is it that you're invoking? And the invoking, and you invoke those not only through the SLAs that you sign up with the cloud service provider, but also make sure that you, because as Khushroo rightly pointed out, while the responsibility will be with the cloud service provider, the accountability still lies with you, right? So from that standpoint, how are you making sure that all the controls which have been laid out are being monitored and are compliant over a period of time? That means that if at all you need to use automation on an ongoing basis, right? Is the cloud service provider really allowing you to do so? And if so, then to what degree? Today, cloud service providers do provide value-added services, because they do understand that their services have to be an auditor's delight. And from that standpoint, they do give you monitoring services, dashboard services, they do give you compliance automation services, and so on and so forth. However, the efficacy and the degree has to be evaluated on case-to-case basis. But of course, what organizations today need to look at is that today, if there is any kind of a potential non-compliance or any kind of a potential impact which may contribute to to financial reporting, then what are the measures that have been taken? How the root cause analysis have been done, and made sure that that root cause analysis goes back as an input to avoid any kind of these kind of complacencies in future. And how an organization is learning from it, while tying up all those SLAs with the cloud service provider. So that is what I would. And today, of course, just to add one more point, today there has been a high degree of attest reports which have been generated. Today, auditors do rely on certain attest reports, especially the SOC 1 reports, which today cloud service providers are in a position to provide. However, again, the degree of reliance on the SOC reports is also depends and varies depending on what the design of that particular report has been, what are the controls which have been done, because SOC attestations would happen for various purposes and not only to draw assurance to stat audits. So from that perspective as well, it has to be evaluated on case-to-case basis.
So how important is the that where the cloud is located? Is that an important thing that a client has to look at?
As far as wherever the cloud is located, I think the primary question here, and it's a very important point you brought out, KK, is where the data resides.
Yes.
And whether the data resides, as per RBI, the data has to reside in India. And I'll talk about the nature of the data as well. And also the DR or the business continuity aspects also have to reside in India. So that's a mandatory this. And when you talk about the payments, a payment instruction versus a payment transactions have been segregated by RBI. A payment instruction potentially can have a copy. It has to have a mandatory copy here in India, but a payment transaction has to reside in India. That is something which has been mandated as per the data localization, circulars which have been issued by RBI, and that keeps evolving as we speak. But this is where what they're speaking about today.
Yeah. So how do new entrants, the MNCs who are coming into India, they will obviously go with the system that they have abroad. So how will they adapt to this standard?
Right. So it's a very valid question. There have been a lot of such instances because of a lot of multinationals coming into the country. First step for them is to abide. So, first is they create a local instance, because there is absolutely no leeway from a regulatory standpoint where you can actually port the information outside, especially when it's a payment transaction. And of course, with the personal data protection bill coming in, the scrutiny is only going to get tighter. So from that standpoint, especially when you talk about maintaining the information about the personal identifiable information of subjects and objects, and also looking at which age category do they come, because the scrutiny of PIs under 18 is much higher than above 18, and so on and so forth. So from that perspective, organizations have to maintain a copy. That's mandated. There's no leeway to it. If the transaction is an overseas transaction, then a copy of the transaction also has to be maintained in the country. So that's the degree of scrutiny which is there from a transaction standpoint. So organizations coming in have to basically make sure that they comply to these norms. There's no other way of it. So that means that calls for going to either cloud service providers who provide you this service, or creating your own instances within the country.
Okay. Yep. Okay. Thank you very much. Can we take a couple of questions, Khushroo and Akshay?
Surely,
because we passed the 5 mark. So let's look at that. So Khushroo, given the stringent and multiple regulations and the fact that audits are truly becoming more and more complex, it's no more just audit, it's beyond audit and looking at risks and compliances. Do you believe that the audit fees in general are not commensurate with the kind of risks that run and the expectations that companies have from the auditors?
It's a very good question. I'm glad it's came up. I'll be very honest with you. I think, and this is my personal view, of course, and I want to repeat that this is my own personal view on this. Yes, audits are becoming very complex. They're becoming very time consuming. They are becoming a very expensive affair, given the fact that you need the brightest people. You need the best of technology and tools. You need involvement of many, many experts who are supposed to be providing you that particular relevant support to sign off your audit opinion. Direct tax, indirect tax, information technology, valuation specialists, I would say even financial instrument specialists, etc., who actually help you to close an audit. It is definitely an expensive affair. At the same time, you look at it, the kind of time that the auditor would be spending, not just doing the audit, but also in terms of sitting with the regulators, inspectors. A lot of audits of auditors also happen. So it may not be just 5,000 hours on the field or on the job. It could be another 1,000, 1,500 hours of going through inspections and regulatory scrutinies, etc. To a great extent, I believe that yes, auditors definitely need a better and a higher fee compared to what generally the mindset is. And with due respect, in India, it's a very different scenario. Not everybody, but to a certain extent, the feeler is that audit is a compliance. And I'm not shying away from saying this, because a lot of organizations feel that audit is a sheer compliance. Not everybody, as I say, but audit is a sheer compliance. Audit is not a sheer compliance. An auditor is someone who is trusted with assessing and signing off on the financial health of an enterprise. And he has to do a good job. And he has to be paid or remunerated very, very well, so that he would be in a position to definitely do better and better. Not that if at all you are not paid well, that you will do less better. Even if the audit fee is 1 rupee, you need to have the same stringency in the audit, because ultimately it is your neck on the noose as an auditor. And therefore, there is definitely a scope whereby the risks and the rewards need to be commensurate, I would say. The rewards need to be commensurate with the risks that you take. And definitely look at this internationally. Internationally, the entire concept of an audit fee is extremely different compared to what it is in India. And I think that kind of appreciation will build up over here over a period of time, whereby corporates to an extent of 100% will start realizing that auditors need to be better rewarded. It has already started, and I believe there is a scope for improvement on that aspect as well.
Sure. Yeah, audit has gone a complete transformation. So I guess so. But at the same time, some will argue that now that you have virtual audit, it should come down. So it's,
on the contrary, virtual audits are taking more time. Now, virtual audits mean that you may not have significant out-of-pocket expenses on travel, etc., which the clients normally pay for. So from that perspective, the costs can be going down for the client, but virtual audits are very difficult at the same time. And therefore, they are difficult, they are more time consuming, and therefore there is definitely a scope in terms of a higher fee. But that's what I'm saying, that it's my own personal view. The views can be different.
So, Pushpendra Khandelwal observes and asks a question. Sir, he says, virtual audit is definitely a good concept, but from my own experience, I have some doubts. When auditor enters in the premise of the financial institution, they smell the things on the basis of their experience. But in virtual mode, somehow hidden things will be very difficult to find out.
Mr. Khandelwal, very good question. I appreciate that you raised this particular question. Well, let me go back 30 years ago, or maybe I think I started my articleship in 1984, so 36 years ago, when I used to enter the premises of a client, and even after I qualified in the year 88, when we used to walk into the clients, we used to sort of always feel that we are the auditors and we should be seen and we should be respected, and here we are to do an audit. Things have changed substantially after that in terms of auditors doing their job in a much more different manner with a lot of technology, etc. But to come to your question, smelling a rat when you are entering the organization, I would agree with you to a considerable extent. That when you actually get to hear the corridor whispers, when you talk to some of the close confidants, when you talk to some people, and I'm not saying that an auditor is a jasus or a spy, but as an auditor, his professional skepticism and his professional judgment, which are basically important aspects to be taken into consideration. An auditor's nature is always to inquire, to observe, to conclude, and to even find out from some direct and indirect, reliable and unreliable sources as to what's happening on the ground. And that, to a great extent, can be missing. But who stops you from picking up the phone and talking to someone or to get the feel and to get the pulse? But yes, that particular thing is missing. That body language, which you can actually sort of, assess of an individual when he talks to you, when you are physically present, can be missed in a virtual environment. But I always felt that 31st March 2021, and I'm quite an optimistic person, I personally believe that when I spoke that 25% can be physical, try and use that particular proportion of 25% in having one-on-one meetings, interviews with the process owners, and getting the feel, rather than spending a good amount of time doing the work out there, sitting out there. Meetings are very, very important. You can always maintain social distancing. I have started to do that with my clients. I maintain social distancing. I go and meet them. I talk to them. I do discuss some issues sitting in one room, etc. You get that feel of an auditor. But nevertheless, as I keep saying, that alternate procedures need to be done. Some of the alternate procedures will not give you 100% comfort. So you need to sort of, balance out in such a way that your satisfaction is also met to a great extent, and the virtual mode remains live and respected as well.
Thank you. Thank you very much. Yeah. Actually, last question on the AI. Okay. So, I mean, we can't, with technology, we have to talk about AI. We have to talk about many other things. So, There has been a spurt in demand in the AI audit software, right? Recently, ever since the COVID come, or even a little before that, it has already started. The artificial intelligence audit software. Why this spurt has come? How does it help in audit?
Yeah. So, KK, the answer to that is that, the first question that you asked was on the sampling size of the audit, right? And of
Yes.
course, the amount of transactions, and I'm sticking to the banking and financial sector in terms of my response here. The
Yeah.
amount of transactions essentially that we see on daily basis. So, of course, uh, the volume is high. There is a lot of data there. How do you make actionable intelligence out of this kind of an humongous amount of data? In addition to that, how are you essentially able to, pick up the needle from the haystack? Um, so hence there is a extensive amount of adoption from the AI standpoint. Now, generally what happens, we understand the concept of the internal audit, we understand the concepts of internal reviews before any organization faces the real auditor, right? The
Yeah.
stat auditor. So from that perspective as well, this is a very similar step where organizations want to understand, where are the potential pitfalls. They would like to understand that, where are the areas before getting into a surprise where the auditor steps in, brings in their sophisticated set of tools and essentially starts picking up holes, before those kind of surprises. Because if you, enumerate any large organization, you would understand that there would be a risk and compliance department, there would be an internal audit department, there would be an audit and assurance team, then there would be the committees, and then of course there's a board, right?
Yeah.
So there is a multiple levels of reporting which essentially has to be done. So to go ahead and every time and again to look at, it is always better to have your own tool, understand the deficiencies from your perspective, and then try to fix them up as much as possible before the audit essentially kicks in. Now, of course, in some of the organizations, if you look at the nature of the audits, that's an ongoing activity. It may not be only after 6 months or after a year. It's an ongoing activity where you essentially, as Khushroo rightly pointed out, it has to be a very, very activity which is essentially conducted on an ongoing basis, and the auditee function has to be very closely working with the auditor function. So from that perspective, again, it's imperative that this activity is ongoing. However, the adoption of looking at this, and again, the other aspect is the ecosystem, right? Now, if you look at any organization, initially it used to be a time of competition. It's no longer a time of competition today. It's a time of collaboration. So if you look at any businesses today, all the businesses have collaborated and essentially to get into a situation where there are so many ecosystem partners, information flowing all across, and at the same time in different ways, right? There is some structured information, there's unstructured information. Of course, organizations, while looking at artificial intelligence only from making sure that there is compliance, they're also looking for various other angles. For example, competitive edge. They're looking at other angles in terms of campaign and sales management. They are looking at aspects around customer relationship. They are looking at various other aspects and angles, right? Security. There is a lot of artificial intelligence today built for cyber as well. So
Yes.
again, various dimensions where an AI acceptability. But again, I would like to point out that it always starts with business intelligence and then goes to pure AI. Of course, this is debatable. However, my perspective is that till the time a routine written or a bot written to basically act by taking its own decision, till the time that doesn't happen, it's not pure AI, right? And again, within the decision making also, to what depth does that decision making really go to? Does it really stay high level, or it goes to the machine level to basically pick up and do machine learning and then basically take it, or it does cognitive computing, depending on how and what angle it picks up. In some cases where Khushroo pointed out the neural So when you talk about the robotic process automation as well, you have certain neural elements also to it. So how do you basically create that? Today there are, so take a simple example of a chatbot, right? Today we know that when we are chatting with somebody, there's actually nobody sitting there on the other side, but you're still able to get those responses, right? Just an example of, but I would still say it's still business intelligence, not AI pure, because you can ask some of the tricky questions and you will get some standard answers that, sorry, we don't have. I mean, for example, not picking up on any AI, but talk to Siri and you ask a couple of questions, you will understand that you start getting some common responses for some of the trending questions that you will ask. And of course, it's maturing over a period of time, and it's only getting to be better. So that's the point I would like to make.
Thank you. Thank you. So, ladies and gentlemen, as we look ahead from the discussion that you've witnessed today, auditors will likely be spending less time handling those manual, time-consuming audit procedures, etc. in the years to come. Khushroo put it at some 25%. That could vary a bit. So instead, audit teams will have an opportunity to shift resources towards analyzing data, providing insights, and advising their clients in different aspects of their businesses, perhaps. So according to experts, a hybrid approach that combines the use of accounting and technology to give better results, to better advice and better compliance could be the days to come from the discussions that we had with this gentleman, Mr. Khushroo and Akshay, is what we could gather. So, ladies and gentlemen, please, I hope you enjoyed the discussion as much as I enjoyed. And please join me in thanking both Mr. Khushroo and Mr. Akshay for spending their time, precious time with us and talking to us about the future of audit in the days to come. Thank you, Khushroo. Thank you, Akshay, for coming over and spending your time.
Thank you, KK. Thank you, and thanks to you and, of course, everybody else who has supported you in this endeavor. Indeed, our pleasure and privilege, and wishing you all a very, very happy 2021 from Akshay and me.
Thank you.
Thank you. Thank you. Thank you very much. Wishing all the audience a happy 2021 and look forward to seeing you in the new year. Bye-bye.
Bye-bye.